All right, welcome to the weekend video. This is Enda here. It's again been a minute since we got to do this, but here we are. I'm going to run through the patterns that I'm working with right now, and hey, see what you think. Okay, so here is euro dollar. I'm going to try and keep this short and sweet. Just let me check. I'll just change the camera there. Is it working? Okay. This is going to be short and sweet, and we'll see where the day takes us. It's still, early in the futures over there in the States. So, as always, this is speculation until it's proved. Okay, so this is euro dollar. We've come down this week off a three-wave recovery. The larger pattern can still be read in a different way, so you could still call this a three waves down, three waves up, and then maybe we have a five-wave pattern heading lower. So this could be a very large flat, which I don't like, but it is what it is. At the moment, I am calling this wave 1 down in 5, and then we have 3 up, 3 down, and then 3 up. So this could be a WXY, or I label it just ABC. Keep things simple. Keep it simple, stupid. So a complex three-wave correction in wave 2, and then we head down into a five-wave pattern lower in wave 3. See, that's even if we get a five-wave decline, it still suits both ways of looking at this. Either a flat correction lower or an acceleration into a third wave. So given the fact that we have a pretty overextended rally in euro dollar, I'm still leaning on the idea that this is a beginning of something bigger. And the funny thing is, I had a previous count for a triangle in wave B, and that could still be the case here, because we could get a large three-wave move lower and then another large three-wave move higher. So that would kind of fit the bill for a triangle again. In both cases, we probably range for another while, maybe towards the end of the summer, and or in that case, we range for another while into the end of the summer. And it's just going to be kind of a bit of a drudge of a market. Anyway, that's the 4-hour count. Here we get to the hourly count. There's the 3 waves up in wave 2. You could. I had switched that to a large 4th wave within there, and wave 1 was down here. Either way, we have wave 1 low, 3-wave move higher in wave 2, and then the beginning of a 1-2-1-2 pattern. I think we could have an extension lower beginning. So I had during the week there, I was counting this as wave 1 in gray there, but it just seems a little bit too shallow, to be honest, to count that way. But I think we've got either a complete 5-wave move lower or very close to a complete 5-wave move lower. If we push, let's say, below 119 again and then recover, that would be an extended 5-wave pattern lower in wave 1 in gray, and then we'd work higher, correct higher again in wave 2 early next week, or depending on the day, how this day goes. We have still plenty of hours of trading left, so we'll see how this 1-2 pattern fares out, and we'll move on from there. Okay, that was a nice full correction. The way we filled out a nice 3-wave correction in a trend channel higher, and then we fell nice and sharply out of that. So that was a nice pattern there. Let's move on. Pound dollar, we come lower again in pound dollar. Well, finally, we're coming lower in pound dollar, and we may have 5 waves down complete, depending on how you want to count this. This could be wave 1, 2, 3, 4, 5 down and 3 up, and then we're heading into a third wave. So for the moment, that's how I am viewing it. 5 down off the high, wave 1 done, A, B, C. Wave 2 done. I get the B wave over here. And then we are extending lower today to begin wave 3. So we may have wave 1 and 2 and heading into third wave down. And that'll be wave 3 of 3. In that case, then today should be a clean lower day without much retracement at all. The major support level that I'm watching right now is 135.63. That's the immediate one below us. We have broken this internal B wave here. Today we're bouncing slightly back up towards it, so maybe we'll start counting that as resistance. Now we have the wave 1 low and the wave B low here, just in a tight cluster. So between 138.29 and 138.57. Let's see if that can hold the price today, and we can extend lower in wave 3 of 3. That'd be good, especially if it breaks down out of this declining trend channel. Even better again. So let's see how wave 3 develops today. The only other way of viewing this right now is, let's say we have an expanded flat wave 2, so we could have A up, B down, C up again. So if we fall and we keep below this, say these double resistance lines here, if we fall and keep below them, that'd pretty much rule out any alternate for wave 2. So again, looking lower next week. Dollar yen really nicely surprised to the upside this week. I have been looking up in dollar yen. So far that's working out well. This looks like a third wave extension higher. We'll get into the beginning, let's say, of a third wave extension higher in wave 3 in red. We have taken out how many previous, let's say, swing highs in the previous decline. So we have, over the last while, we've taken out 1, 2, 3, 4, 5, and today 6, overnight 6 previous swing highs, which brings us back to June 2020. So 9 months, we've taken out, we're back to 9-month highs now. So that's a nice move higher. And if you look at it in comparison to, that kind of long dragging decline that we went through for the last, then again, 9 months, 10 months, even a year actually, when you go back previously, that long drag lower in what looks to be an empty diagonal to complete wave B. What we've done in, let's say, 2.5 months is to retrace most of that decline. So that's definitely, it's got the, let's say, the ratio right there in terms of an impulse move versus a correction move. Okay, so it's not that I love the dollar, but I am a longer term bull on the dollar because of basically the pollution of the markets in terms of the absolute madness that has overcome it. It's just it's hard to view it as a market anymore, really, isn't it? It's just an absolute madhouse of speculation. So when that falls apart, it'll create it basically right now. This mad stretch and speculative feverish high is one heck of a long short on the dollar. A long short, sorry. It's one heck of a short on the dollar, basically. It's a very, very heavy short on the dollar. And when it falls apart, it'll create a bid on the dollar just by default, basically. And that seems to be what's happening right now. So let's see how that tracks for the next while. Let's get into the hourly chart here. You can see that I have 1, 2, 3, 4, 5 waves up in wave 1 blue, 3 waves down in wave 2, and then we have an extension higher in wave 3. So it looks like we have rallied over the last couple of days in wave 3 of 3 of 3. So we're coming down slightly today. Maybe we'll see a 3-wave decline in wave 4, which we would like to hold above, let's say, that kind of left shoulder here. So somewhere between, I'd like to see it hold above 107 anyway. Maybe that spike high there, that would be, what that bring us to, 107.16. It would be good if we held above that level and we created a clear corrective pattern of this possible wave 3 high. And then we head higher again in wave 5 once that's complete. So next week it's looking early. Next week, Monday is looking corrective. Let's see how it pans out. And then we head higher into wave 5 of 3, which could easily push us towards, above 109 easily. And depending on how the rally goes, before wave 3 is finished, it could push to 110. Let's see how that happens. Definitely the fib targets for, if we go out to the 4-hour chart, and we pull a fib grid on that. Let's push that to the wave 2 high. We would reach our wave 2 low. We would reach equality. We're almost at, well, you could pretty much call it equality at the high, overnight high. That's 108.58, or the early morning high today. We have 161% relationship here up at 110.83. So if we reach that 162% extension, we could easily see above 110 in wave 3 in red. So let's see how that goes. It doesn't augur well for the risk assets, the stock market. If we do start pushing above that 110 barrier, oh boy, that brings us back up towards the February highs. You can see here we have a double top here at 111 and 112. So we could easily break out above that. And wave C is the longer term target. But we could easily push out above that as the larger wave 3 in red completes. So let's see. I'm looking a bit too far into the future there. For Monday, let's see if we can clear out wave 4 and hold above 107.16. Okay. Now, the stock market has come down in 3 waves. I read an interesting quote from John Husman, and he was talking about hashtag stock crash, or stock market crash. Excuse me. Stock market crash was trending on Twitter, which is interesting after a 4% decline off an extreme all-time high. So if you think a 4% decline is a stock market crash, you're very young in the in the game here. You don't even remember last year, actually, if that's the case, because in historical circumstances, that was a crash, but it wasn't a crash, if you know what I mean. It wasn't. It wasn't no 1929. Actually, it wasn't even in 2008. So here we are. That's the kind of. I think that could be a function of the extreme in leverage, extreme in emotion as well. But the extreme in leverage could have gotten us here, where 4% decline is actually a crash. People are probably feeling it. If you're levered long, you're definitely feeling it. So maybe you're crashing. Okay, 3 waves down so far. So we have an alternate count for this. Let's see. I would like to see the back of this rally, and let's just move into the next phase without having to swallow any more pride. But hey, life has me swallowing pride, so that's just the way it goes. Okay, move on. That's it. That's the 4-hour count. We have a top in place, an all-time high in place. So far, we've fallen 3 waves. Let's see if we get back towards that 29,600 level. It's the previous 4th wave, 29,650 or so. And if we break that, then we can start working more seriously to the downside. Here's the hourly count. We could be either wave 1 and 2 complete here. Again, this is the alternate count here is for an A, B, and C rally. So a big 3 waves up in a final 5th wave of an end diagonal. Here's that previous 4th wave low. So we want that to, in that case, if we break the previous 4th wave low, then we've got to switch gears completely, because the ending diagonal will be ruled out. But for the moment, we could have 1-2 and some sort of a 1-2 pattern underway. I'm showing today maybe some sort of a failed C wave, so an A, B, C fail in wave 2, and then a spike lower again in wave 1 and 2. Especially if the reason I'm kind of pushed towards that is because this morning's futures high is pushing into that spike low that we have. When was that? Yesterday. And that would kind of rule out a fourth wave correction into a wave 1 low. We'll see. I'm kind of tentatively leaning bearish as usual, but we do have that alternate wave C high possibility looming large over us. And so far we've got 3 waves down. It seems to be a corrective rally so far off the low. Especially, I would like to see today end lower again. So if we push lower again, and we did, create a clear 5-wave pattern in a further wave 1 or wave 3. So by the end of tonight, we should be able to classify what this decline is. And then again, by the end of the day, if we rally back above, 31,300 again, let's say that's that internal low there. If we break 31,300 again, there's every chance that we've moved towards that alternate account. So we're kind of in a pretty weedy spot at the moment, where animal spirits could take over again, and we could easily see that market punch higher into that alternate account. But the window is open. Maybe we'll get the trapdoor might fall. The window is open for bearish opportunity. The trapdoor might fall from underneath the market completely and hang it, as they say. We're definitely close to that in general terms, but yeah, this pattern needs to show us a bit more, let's say, before I get super intensively bearish, as I would only love to do. Okay, let's move on. Let's get on to gold. So it's been a tough week for gold. We're moving lower. Well, we're hanging below 1700 this morning. In general, we've moved lower all week, and it's been, for the wave count that I've been looking at over the last few weeks, it's this is right on form with where I was looking to go with this this large fourth wave here. At this point in time, we're into the 1600s now. There's no reason why we don't, I think, push towards a flat 1600 low somewhere to complete wave C. So it looks like the momentum is on the side of the downside at the moment. The ironic thing is I'm actually getting more bullish as this pattern draws to a close. As wave C pushes in towards a low, my kind of bullish percentage pushes higher. So we're still working on a 3-wave correction. We've come down off an all-time high, and when we do have that 3-wave correction done, this will be a pretty nice buying opportunity for gold. We're not there yet, but anyway, if you are a serious long-term buyer, maybe you start nibbling now. I don't know. I'm not there yet to start nibbling at it. It seems like we need to create a firm low and then, a nice higher low, or start to build off a low anyway. And that might take another few weeks. It'll definitely take another week anyway before we start seeing wave C come to a close down around that 1600 level. Okay, that's the 4-hour count. That was the daily count. I do have, kind of a speculative, let's say, possibility for wave C here, in the fact that it may be an ending diagonal. So it could be some sort of a wedge pattern into a low. If that's the case, then we're darn close to a low right now. We'll have to see over the next couple of days if we start to see the price, punch higher again in a sort of an impulsive pattern, or with, let's say, an impulsive bent on the pattern. So nice kind of sharp spikes higher, followed by, let's say, lazy action off that high. So if this ending diagonal or this wedge lower in wave C is the actual count rather than a clean 5 waves drop, then we are much closer to the low than I previously thought. So let's see how that works out. The hourly count here is the most bearish at the moment. We're working in wave 3, wave 5 of wave 3 of wave C. So you can see there's a 4-hour count. You can see wave C here of wave 4. So wave C is what I'm breaking down here. And we're now coming to close in wave 3 of that C wave. So we should see next week, we should see the price punch in some sort of a low in wave 3 and then correct higher in wave 4. Depending on how that pattern goes in wave 4, it'll give us a hint of what's actually happening in terms of that alternate count. For the moment, today, I would like to see a little bit further downside, 5-wave pattern to complete wave 5, and maybe a push below to 1670 towards 1650 maybe. But we'll see how it goes. I do want to see that wave 2 high here, 1723 hold. That's let's say the concrete level at the moment. Okay, let's move on. And we have a crude oil. I want to go way out in crude oil. This is the weekly count in crude oil. I just don't think we are there. I don't think we're in a new bull market in crude oil, to be honest. I think we still have another punch into like a desperation low in wave 5 to complete. I think we could have it's a large wave C, so we're looking at 1, 2, 3, maybe a running flat wave 4, and then wave 5 down. If you get to the daily count here, you can see here's that count in wave C of 4, and we're pushing up to significant levels of resistance here, up 66.50. So 66.50 stopped the previous rally, and then we crashed into last March and April lows. Off that low, that was the crazy negative price was at -50 or -$45 a barrel on one trade there. Whoever got that was if they could hold that for a long time, that was the cheapest oil, and it's now the most expensive. As the biggest run in oil in history, actually. If you count off the -50, we've now made the biggest run in oil in history into these highs. You could count this as a 3-wave rally. It still counts well as a 3-wave rally, and we are pretty overextended. And you can see that we have a clear lower high in momentum off that wave A high. So, in terms of, the lower degree count got bust out this week because we spiked to a new high, but the higher degree count here it's pretty much spot on, I think, in my mind. We could have a running flat wave 4. I did count 5 waves down. That was a clear 5 waves down, so it looks like some sort of running flat wave 4, and we spiked to a new high. We're filling a trend channel again in wave C. So what happens from here? I can't see this holding, but I'm just going to have to give it time. I'll ask for your patience on that one. Move to the S&P. We did break nicely lower this week. I had an inkling that we might push towards that upper trend line again to close out the ending diagonal. We didn't do that. We've broken down further. And again, we have a previous 4th wave low, so that's 36.60 or so. This previous 4th wave low is the one to watch in terms of a signal that the overall pattern is done. So let's get into the hourly count here. I'll show you what I'm thinking here. you could either count wave 1 down here, 3 waves up in wave 2, or you could count wave 1 up here, and then a running flat wave 2, and then maybe 1, 2 down into wave 3. The last night's low was retraced slightly today, but it does look pretty corrective at the moment. So if we open lower, or if we open at the futures high and then come lower for the rest of the day, it looks like we have a clear third wave pattern then, and that would begin to rule out this again, the alternate count here for a B wave low, especially if we break that 3660 level, 3666 here. But I know the cash price is slightly different. If we break that low, then we are pretty full on moving into a bearish cycle, I think. In terms of the larger count, I do want to complete 5 waves down, and then look for a corrective lower high. So we build over the next month or so a nice right-hand shoulder before falling again into, let's say, that kind of acceleration phase lower. Okay, so this today, well, we'll just see how it goes. If this corrective rally today in the futures gets retraced again lower, then we're on for a third wave, third of a third downwards. Okay, so move on to silver. Here's the larger count in silver. Actually, I'll go to the daily count. Here's the daily count in silver. We're looking at wave 1 at the recent highs, and then an A, B, C pattern unfolding in wave 2. Still have an open kind of door below us for a possible run down into below 21 anyway, maybe below 20. Maybe we hit this left shoulder here, which would be about 1950 or so. It looks like, for me anyway, it looks like we need to make a new low below 21 to complete 3 waves down wave 2. That will completely wipe out the any bullish bent that is still left in the market, or any kind of let's say, remnant of bullishness, or the long side completely would be gone by that time. That would really create the opportunity for a low to form in a second wave, and then it would look for a significant rally into wave 3. And I think that rally could carry us up to a new all-time high. Okay, let's get to the 4-hour count here. Here's this A wave down, B wave up, and then we're working on a C wave down. There's the minimum low for wave C would be 2165. So a break of 2165 will do it for me. If we get a break of 2165 and a complete 5 waves down, even better. Let's get into the hourly count here. There's wave 1 and 2 of C, and it looks like we're heading lower into 1 to a third of a third over the last couple of days. So if this is a third of a third, then I would like to see a further acceleration lower today. Start taking out some of those this kind of swing lows here. So a previous second wave here at 2468, and then a previous C wave low there at 24 flat. That's what's out ahead of us as wave 3 kind of continues lower. That kind of longer term target at 2160 is where I want to see us head over the next few weeks. It may even only take another week to get down there. And at that point, just like gold, at that point of maximum pain, let's say for the price, that's the point of maximum gain or potential for the upside. So we're still looking at a C wave that needs to be completed in silver, and we'll see how that goes. I want to push out to the Nasdaq, because the Nasdaq, being leader of the pack over the last year anyway, over the last since 2009, it's been the leader of the pack, and it seems on the downside it is the leader of the pack also. So we may have 1 and 2 heading into a third wave down. You can see this is what actually, wave 1. Get in there. Wave 1 down, wave 2 up, or you could call wave 1 down into here, and then a running flat wave 2 up. And we seem to have an extending pattern lower in wave 3. So this could be wave 1 of 3 complete, and we get some sort of a corrective lower high again in wave 2, and then head lower again into wave 3 of 3. So if that's the case, if we have a third of a third ahead of us, then it's kind of look out below, really, and watch your hat, because this one could get very windy. That's a stupid analogy, I know that, but suffice to say that this it's interesting to see the leader now becoming the leader to the upside, now becoming the leader to the downside, and if it continues lower, then we're full on into the next cycle, I think. Anyway, that's an interesting pattern in the Nasdaq. Thank you all for watching. Thanks for being with me throughout the week. God bless you all. Have a great weekend. Shalom to you all. And we will see you next week on the website at bullwaves.org. And hopefully next week, then, weekend again. Next Friday, please God, back to another video. Hopefully I can keep it a little bit more, consistent from now on. Okay, God bless. See you next week. Be good. Don't be bold. And shalom to you. Bye-bye. Now, how do I turn this off?